And I always tell people, I don't use options as a way of, I use options as a way of picking up income, but on stocks that I want at prices that I want.
Right.
And on stocks that I own, writing covered calls, where my risk is I make less money, which is possible. But
you're giving up the right tail.
Yes.
Right.
And I do it on 30 or 40 stocks. So is it possible that all 30 or 40 stocks go flying above my 10 delta in the 1 month that I write it? Yeah, it's possible. Is it probable? Probably not. And that's where I sit there and say, and by the way, one of the things we're going to talk about at lunch is I want you to help me, because you always joke with me. I actually like the idea of insuring ourselves of margin downside risk, because we do take leverage on our portfolio to buy other assets. And I want to talk about this. So I look at it and go the same thing. Like when you're picking up these little pennies, you sit there and go, look, they're pennies.
Right.
I have a NASDAQ 100 short right now, and I write covered puts on it. And there are times when I don't write anything because I'm looking at going like, do I really want to write this? Yeah, it says for 10% for the month, but I'm picking up literally pennies on it. Like, what's the goal?
Right.
Even though it's a covered put, where I'm not going to lose, I'm just going to give up gain. And I'll sometimes sit there and say, the premium, I'm not going to write this put right now because it's like, it's not worth it.
Yeah. Well, I mean, again, you have to like decide what risk you accept and which, so for me.
But understanding the risk is the important part.
Right.
Knowing what it is.
Well, understanding the risk, but also like I'm not trying to hedge the partnership against like 10, 20% market declines.
Yeah.
Because that's kind of like too expensive.
Right.
Like,
Of course.
if you do that, you're going to give up too much return because the hedging isn't free. Risk management isn't free. You are trading off something from one path for something from another path, right? And so I think what happens right now is people have completely forgot that there's a real possibility of a left tail, even after the recent thing, because like there are all these pundits who are saying
it went up so fast.
It did.
Yeah, right. Well,
the last two bear markets have just been that.
Well, but see, this is again, I'm not a market prognosticator. I'm a bottom-up investor. But like, if you look at the 1930, there was in the spring of 1930, there was a 25% rally between January and April.
Mm-hmm.
And if you look at what was said about it at the time, it was like, oh, okay,
Stocks are back.
Right? And the next time you reached the levels achieved in April of 1930 was early 1950s. Now, again, the point isn't that this is going to reoccur. Obviously, it's not going to reoccur exactly. That is, hopefully, we all understand that. The point is, nobody could fathom. Like, if you were to do a survey of whatever, 1,000 financially wise people at the time of what's the chance that the current levels will only be reached in 20 plus years,
Right.
I don't know if one of them would have said that that's likely,
So
right?
it's funny. I have a bet with somebody at a fund at 2,600 the S&P. I made a bet with them that 10 years from now that we would be below that level. And right now, he writes me emails going, boy, your bet's looking terrible. I'm like, that's fine.
Right.
Because I made the bet. It was 2 or 3. It was right before COVID. It was like 2019. Sure, that's possible. But again, I could be wrong. What's the bet? Dinner.
Right.
Great.
Yeah.
It's okay. But, and the funny thing is about that also, you talk about you're not trying to hedge 10 or 20%. The other thing is, if the market hypothetically fell in half tomorrow, is it possible the market falls another 40, 50%? Sure. But today's price is much more likely that the market falls 40, 50% than it is
Half
at the
of
S&P at half.
Well, the other thing is just, again, not again to options, but like the way the options will get repriced is that you will not be able to get
'Cause it'll be so
insurance
expensive.
once the event happens, right?
Yep.
So the thing is, right, so if you have, so like again, I'm trying to cut off extremes because like, I know that I don't own Googles of the world, right? I get that. And so I'm trying to say, okay, my portfolio will get drastically marked down if that were to happen. That would be a great time to be adding to some of these positions. So not only am I looking at the payoff profile on paper, I'm saying I will be likely able to buy things at 30, 40 cents on the dollar with $1 of proceeds, right? So, so I had some of these play out in a moderate way, for like 10%. Well, the things I bought for 10%, hopefully, eventually will hatch into 20%, right? So you're getting the money just as money is most valuable and it's hardest to get, right? Mm-hmm. Like, because people say, well, why don't you just all be, fully invested and you just sell things that have done better? Maybe, but like, I think like without naming a name, I'll give you the general pattern of one of my defensive investments. It's basically a company that's trading for less than cash. It's a holding company run by value investors. They just sold their main assets. They got the cash. The deal is closed. The cash is in the books. They have a bunch of other assets. They're buying back some stock and they're investing. Their plan is to invest some of that cash into 1 to 3 operating businesses that are cash flow rich and basically make this into a going concern. So my risk is capital allocation. But a competent value guys, which I believe these are, like a bad outcome, maybe they take $1 and make it 70 cents. Well, this is trading at half of an AV. And what's better is that it benefits from the more chaos there is, the more prices go haywire, the better they can deploy that NAV,
the cash,
right? So on the defense, so like I don't own the Googles of the world, rightly or wrongly. There are some things that this is not going to be a 10 bagger ever. Like this doesn't have the right tail kind of possibilities unless we're talking about they buy the business, so they compound and so forth. But it does kind of defend against a bunch of things. But here's the crazy thing. When they just had this event, so the event went from a possibility that they were going to sell this business to a letter of intent to a closed deal, stock is actually down. Why? It's a small cap. It's like less than $1 billion. It's not micro. It's like $500 million or so market cap. Nobody cares. It's in that bucket. So so can I sell it? Hold up a bit better than something more risky, maybe. But will I be able to, if a bunch of my investments get cut in half for no reason, just because they're of what they are on paper or they're in some quant's bucket, can I rely on some of these others holding up as a source of cash to really invest? Or am I going to be saying, well, I have to sell 50 cent dollars to buy 40 cent dollars, and maybe that's, sure, I will reallocate and be rational, but it's not a great position to be in. So the hedges are there to create this inflow, and they're very convex, right? With convex, I mean they pay off nothing for a while, and then they hockey stick, right, for the extreme event, because that's what I think the probability of that extreme event is, of course, is mispriced right now. But if we're in a world where everyone talks about how this is the next Great Depression or Japan 1980s, that's not a time to have the hedges. They're too expensive. That's when you probably want to be fully invested, no hedges, in businesses that you're very sure can survive a nuclear winter, 5-10 year tough period. Cash flow rich, right? So the opportunity set in each environment is different. You have to, right now, there are not that many great values. There are not that many cash flow rich, high quality businesses. They're also mispriced. Why would there be? Nobody's almost scared. People are worried, is there a recession? Who knows? There's a very high chance we're already in a recession, and we just haven't fully acknowledged it yet. But the point is, no one is talking about the possibility of something far worse, right?
And that to me is an indication that's the biggest indication to me of where we are in the market.
Yeah. And it's not priced. The markets aren't priced. I mean, you look at credit spreads, high yield spreads tightened recently. They hit 5%. So if you look at history of high yield spreads, right, just like for people who don't know the history, I'm not the world's biggest high yield expert by any means, but they run 3 to 4% when things are benign, and they spike to 8 to 15% at market crises, right? And that's based on the default rate and the recoveries you expect and so forth. So they crept up to 5 and low 5s, which is kind of starting to show some sign of elevated perception of risk. And the last time I looked, last week, we were like at 4.5 again, right? So they're kind of like and that's with economic numbers, which, by the way, why does economic numbers matter? For high yield companies, they're the more likely to be in distress during a cycle. So therefore, they're more likely to default if there's a recession. So, so you kind of have, many indicators suggesting we're already in a recession or one is coming, and yet the financial markets are oblivious, kind of like, we're not worried, okay. They might be right, because you have to think probabilistically. You can't say we're definitely going to a recession. That's like only idiots say, I know, yep, we're going to go into a recession. That's how long it's going to last. It's going to be this. Anyone who talks like that, just
avoid
don't listen.
the play.
Exactly.
Yeah, but you can say, okay, there's some possibility of, the Fed threads the needle exactly right. There's some possibility of some extreme shock, and there's a bunch of possibilities in the middle. I can't exactly quantify the probabilities, but here's a range. The markets aren't pricing much or many scenarios other than everything works out. There's a perfect slowdown. We stay there for a bit, and
basically the only thing they're pricing.
And so I think, so you kind of look at, again, the cliche of Buffett, be greedy when others are fearful, and the opposite, right? And right now, despite this kind of implosion in the SaaS and EV part of the EV bubble, there's still a lot of optimism and a lot of security prices. At least that's what I see.
Of course there. I mean, listen, I don't even want to. Listen, I'm much more willing to say of course than Gary is. Maybe that's my lack of humility, but I'd look at it and saying, pre-COVID, the S&P I thought was massively overpriced and hit 3,300, 3,390, whatever it was. We now hit 4,800. We're at 4,100, whatever we're at right now in the S&P. Like, what's changed since COVID? It's better.
It's actually gotten a lot worse.
Well, how are we 20, 30% more expensive for what? So either way, Gary, this has been a long interview. We appreciate it it's actually been a lot more exciting than I thought. I thought it was going to be me just poking you and having you say, Paul, stop, you're annoying me. So I'm an investor in Gary's fund. Gary is very select with people. You have a $500,000 buy-in, if it's okay for me to mention.
Sure.
But Gary always asks us for referrals. He always says, Paul, do you have any like-minded investors who have the same outlook? Because Gary doesn't want to deal with people who are saying to him, like, oh my God, what happened this quarter? I don't even know why you said, if I were you, I wouldn't even send quarterly statements out. He sends them to me. I look at them. I respond with something sarcastic. He responds half the time.
Yes. I love those emails.
Yeah, they're the best. Mikey and I sit there and, when the money goes up, I think one month you were up like 40%.
No. Well, it was a large amount. Yeah, but no.
The whole point was it was a fluke.
Yeah.
But Gary says, please don't annualize this. I said, come on, Gary. You think I'm going to annualize this crap?
Status quo.
He said, please don't annualize this. I said, okay. And we're up a little bit, but I don't care what we're up or what we're down. I just know that.
I mean, it's the process. And I appreciate your trust. And it's it's like what I'm lucky with is that your behavior is very atypical for the market or for most investors, but it's pretty representative of the people in the fund.
Yeah.
Like I don't get like, why is this month that or this or that? And honestly, I gave a talk at a value conference about pain in investing, maybe a topic for another time. But like one of the things that is poisonous is people who are like forcing you to think the wrong way.
Of course.
Right.
Whether it's peers, it's like you're investing bro. It's like, hey, what are you up today? I'm up 50 bips. Like completely non-noise kind of stuff, but they're shifting your frame of mind to noise. I mean, unless you're a day trader and that's your expertise, in which case that is your P&L and fine. But for most of us, what you're up with shouldn't be that important.
With like-minded people.
Yeah, and so I think, and also, just like get rid of the toxic people. Like, I mean, I think like I just don't talk to people like who have that mentality. Even if they have stuff to add, it's just not worth it. Like, hey,
let's start emailing Gary every day saying, how much money did you make us today?
I'm going to create an auto response.
You send the gains, I'll send the losses. How much did you make today? Good. How much did you lose today?
Gary, it's wonderful having you. I'm glad we have our money with you. If I suddenly sold a company tomorrow for $2 billion, I would tell Gary, you're closing down your fund, you're working for me full time. And I think he would take it. He wouldn't get the returns he gets because Gary is very big on having a cap on the size of his fund because he wants to be able to get outsized returns. And he's not like everybody else just chasing assets under management. Gary's a very humble man from humble beginnings. And funny thing is, Gary, even though I don't come from humble beginnings financially, my view of money has shifted so much in the last 10 years. Where 20 years ago in college, if somebody told me, Paul, you can go to this place, right, have a hedge fund, make $100 million a year, or go do anything you want in the world and make $10 million a year, I would have picked 100. Now I'd be like, oh, give me way less than 10. Right. I don't want the $100 million a year. And people would be like, you're crazy. I'm like, listen, I just look at the ability to be able to do what I want when I want as the most valuable thing. Yeah. That's what Gary does.
It's time. It's time.
Yeah.
Time. And I always tell people, how would you spend your time if you were a billionaire?
Mm-hmm.
And how much of that can you do today?
And that's the thing. I always tell,
a lot more than you think.
I'm engaged now, and my fiance and I talk about it. And I say every day, I like texting Mikey and Mo last night. Every single day I say to her, I'm like, this is our life. Like we can literally, somebody asked me yesterday in the community, when and where do you plan on retiring, Paul? I go, well, I consider myself retired now because the definition of retired to me is being able to do what you want, when you want, and not worry about money. Okay.
Yeah.
That's us.
We're both lucky. And look, I appreciate your friendship and your trust, and happy to be here.
Would you consider us friends?
Yeah.
I would consider us friends.
Well, that's before you beat me in chess today. So that might impact our friendship a little bit.
You've gotten a lot better at chess, Gary. Gary played chess in high school. Mm-hmm. And you were what, 1600 rated? I think I was like
1500. I was 1500, 1500. I plateaued. I was like a good organizer, not a great player. I was the board 4. We won the nationals, but it wasn't because of me. It was because of the other players, and I just didn't bring them down enough to upset the talent.
What's your Blitz rating now on chess.com?
I'm about 1600 Blitz.
By the way, what happened to you? You move every 18 days now.
I know. I'm sorry. It's. It's been a really busy period, like between earnings, some travel, and my bonsai. Which
By the way, it doesn't bother me at all.
No,
that you
I know,
but
I
it's
know,
funny
I
because
know.
he used to tease me about that. I'd go like 3 days without moving.
No, you used to go on vacation. I'm like, where are you? Are you like in some Mexico with no reception kind
Yeah,
of like
really?
place? No, it's funny because like I don't play as many daily games anymore. I've been playing complete junk, garbage blitz chess.
Oh, I love but
3 minute.
Ooh, three. I don't do
3-2. No, 3-2.
I don't do that.
I've been doing exactly what I told you not to do because right now is my time. I just want to have fun with chess.
That's the point.
I want to open it up when I'm sitting outside, and I want to stop thinking about things that I'm stressed about and just have a mindless game where someone plays the Catalan opening like you and beats me on the queen side,
So
and that's okay.
So Gary, can I say something about that? Just like we talked about earlier, listen, your goal isn't to become a chess master. Your goal is to enjoy chess and become better at it. If you go through spurts of playing even bullet, who cares? Keep yourself in the game.
Yeah.
And then you're self-aware enough to say, you know what? I need to go do a couple more deeper games.
So I'm a very seasonal player because of the way my life is, my hobbies and hiking, like bonsai. So like from mid-October, late October when fall foliage is done in New England to like through mid-March, I will actually be like studying maths courses. Shout out to Matt.
Chess goals.
But my motivation, I'll tell you, we were talking about my youngest son, Jacob. He's like, I need to be sufficiently better than him for a long enough time to actually be able to coach him. Especially as he gets more patient.
Yeah, when he gets more patient, he's going to be a phenomenal player.
I think he has the potential. Like he has the potential, and my goal is
There's
to
a wide
help him-
range.
to help and dynamic. But I think my goal is this is the hardest thing I think in life is create intrinsic motivation.
Yeah, especially you don't want your biases showing up in your children.
Yeah, so
of
I'm
course.
trying very carefully not to lead him into like, what's your rating? Like I actually don't ask him about the rating. Like it's kind of like you don't ask about the returns. I purposefully, so I give him stickers now. Maybe not too much off topic. You can edit it if you want.
No, we're not editing.
Okay, fine. Don't edit it. But he gets stickers for Hutchins.com has a score. He has one sticker for 75 or better and one for 85 or better. Right.
Oh, great.
So process-based stickers. But I always pair that with, hey, listen, man, I love you no matter what. I don't care how good you're in chess. That doesn't change. Because the other thing is you can put too much pressure. And I grew up in like this environment where I've seen some parents. There was this girl. I used to play mainly at Manhattan Chess Club in New York. There was the Marshall in Manhattan, but I played a tournament too in the Marshall, and she was like an 1800, which for a high school student was really good.
Oh yeah, it's phenomenal.
And like her dad brought her to almost to tears. Like he ripped into like the one game she lost, and like, why did you do this? This is terrible.
She's not gonna have a good relationship with chess.
Yeah. Well,
her
right.
dad.
And so I looked her up, like not as in like creepy, but I looked her up on like she never made master. So like crazy, right? High school,
No,
like,
it's not crazy.
13, 14, 1800.
Happens in sports, too.
I mean, my guess is if she had different nurturing, intellectually, I'm sure she's capable of being a master.
So first off, he just said she was 1800, which is pretty good for high school. 1800 is pretty good for anybody. I don't care if you're high school or not. 1800, you could literally be in a chess room with 30 people and you're beating.
What I'm trying to say is Magnus Carlsen wasn't 1800 at 13.
Okay, so that's like saying LeBron James, like, come on, Magnus Carlsen.
My point is you're not on track to be a world championship contender.
Enjoy the game.
At that, yes.
Enjoy. Have you read the book Range?
No.
Please read it. I think you'll really enjoy it because it's about a lot of people have said it's a great thing to do for parents on how to get their kids to learn more and understand the best way of learning. I'm reading it right now. It's kind of dry. I read 5 or 6 pages at a time every day because it's kind of dry, but I think I do see the value. Gave it to Mikey because he has 2 girls, and I'm never going to have kids, but I still want to have this idea of teaching. But Gary, thanks for coming on the show, and we will, we'll probably have you on again at some point. I'm glad your wife let you out of the house now.
Thank you,
Me
Gary.
too. All right.
Appreciate it.
All right, see you
Take
later.
care.
Bye.